The silent recession? Well, a recession is defined as a 20% drop in the price of a stock. Now, obviously there has not been a 20% drop in the overall stock market, but over 50% of the stocks in the S&P 500 have experienced a 20% or more drop in the past year. Over 2/3 of the companies listed in the NASDAQ have experienced a 20% or more drop. Now, you're probably wondering why the stock market is still so high when that's been the case. That's because the 10 largest companies in the stock market by market capitalization make up 30% of the S&P 500, and these stocks have done very well this year. A lot of the money is concentrated heavily into these large companies. This includes companies like Apple, Microsoft, Amazon, Google. Apple alone makes up close to 7% of the weight of the S&P 500. So Apple, for example, very heavily affects the price of the S&P 500, whereas a smaller company would have a much smaller effect. This is called the market breadth, meaning how many stocks are participating in a stock market rally. Now, the fact that it's down to so few companies is not a good sign for stocks. So just keep that in mind.